Okay, afternoon guys. Hope everybody's well. Hope you've all recovered from that brutal sell-off into the close last night. I just wanted to show you the longer term chart here to start with, because I wanted to point out the fact that, okay, yesterday we had a huge sell-off and we broke that range I was talking about that we'd been in for the last sort of 10 days. The high being at 10.99, the low being at 10.76.50, and we broke below that range. But also quite significantly, if you check out the high of September on the 23rd, which was at 10.75.75, we actually broke below there as well. So that was quite a important level. Or 10.76.50 as well, that kind of level, because it was the high on the 12th of October as well as being around about the low of that range I'm talking about. So that area was actually quite significant, just on a technical point of view, in terms of the long-term bull trend that we've been in since the beginning of October. So clearly we've broken to the downside of the kind of upward trend channel, and so that phase we've been in since the non-farm payroll Friday on the 2nd of October, where we've just been climbing through the skies, that's definitely come to a bit of an end with a pretty abrupt halt yesterday evening. Let's zoom in. I want to talk about this sell-off. I mean, it was very unexpected, and in my opinion, a little bit ridiculous. I don't think that's too strong a word to use here. Basically, the trigger for this sell-off was Bove, an analyst, a US analyst who works for a fund called I forget the name now. Sorry about that. But anyway, he's an analyst. He's a banking analyst. He's got a reputation for actually not being that good at picking direction of the financial sector as a whole. I mean, his reputation is not great. He's made Rochdale, that's it, thanks Yao. Rochdale is the company he works for. But his reputation is certainly not fantastic. He's made some good calls in the past, but he's definitely made his fair share of bad calls as well. So basically last night he issued a report on Wells Fargo saying, right, I did have them as a neutral, I'm now downgrading them to a sell. He said he didn't think their Q3 earnings were sustainable. He thought their exposure to the credit side of things was too great, and they could find themselves in a bit of trouble if credit conditions worsen. Okay, and this just kind of lit the touch paper, I guess, and people kind of suddenly thought, well, actually, maybe there is still a big bank failure still out there, and Wells Fargo, who had issued their earnings report yesterday morning, which was fantastic. They find themselves, their stock price was suddenly down 5% as people kind of clambered on board this idea that they may be in trouble. Now, there were two other factors that may have influenced this and added to that downside pressure. First of all, I want to talk about oil. Currently trading $80.35. Oil climbed hugely yesterday. Another really bullish set of inventory numbers, and yesterday's low was 77.65 for the oil price, and its high was $82. Okay, I mean, that's an incredibly big move. That's over a 5% move. And now the point I want to say is we're talking about the inflection point, which is basically means when does a rising oil price change from being a positive for economic growth to being a negative for economic growth? And it's obvious that it's around about here. Okay, people, when we spiked higher and we started touched $82, I think people thought, well, hang on a minute. Oil's gone through the roof very, very quickly. We only really broke through $70 a few weeks ago, and suddenly we're at 80, and people are thinking, at 82, and people are thinking this maybe is getting out of control, and oil price at this high might actually start having a negative impact for economic recovery. Okay, so that's one angle. Another one was Walmart announced a load of sales that they're going to be implementing for the holiday season going into Thanksgiving and Christmas, and I mean, I personally think you can argue this from two angles, but the pessimistic angle is people see this as Walmart being quite worried about consumer spending levels in the holiday season, hence the need to implement some sales. Okay, I personally think you can argue this from the other way. I mean, I think Walmart have gained a big portion of the market share that they didn't have during this recessionary period as people tighten their belts and move to more towards the sort of budget end of the retail market, which is obviously what Walmart, that's the position they hold. I think they've gained a big portion of the market share, and I think in an effort to keep that market share in the face of what looks like a recovering economy, Walmart don't want to see the market share they've gained start filtering back to the higher end products. So let's keep them on board with some pretty tasty sales into the holiday season. So you can argue that from both ways. Anyway, three factors why the sell-off happened. It was sparked off by the Wells Fargo story, Bove talking them down, but add to that the oil price starting to get a little bit pricey for the economic recovery situation, and also Walmart sales for the people worried about the consumer going into the holiday season. Anyway, huge volume during this period where we sold off from about 1093.50 right down to 1072.50, so over a 20-point move in pretty short order, in under an hour. We tested that low again this morning. We moved just a couple of ticks below it, but basically that low pretty much held, and we're just ranging around the lows, waiting for the earnings that are coming out. We've already had some earnings. Shering Plough in line. Dow Chemical had a good earnings report. Philip Morris earnings per share was good. Revenue was in line. So nothing spectacular yet, but we've still got AT&T, Bristol Myers, United Parcel and McDonald's still to come before the opening bell. Okay, so there's still plenty of earnings news yet to hit the wires. A lot of those are due in 5 minutes, so I'll make the rest of this pretty quick. We've got economic data in the form of initial jobless claims, and leading indicators are at 3. Okay, initial jobless claims at 1:30 as usual. And Andrea sent out a load of information on this, so please check your emails on that. Just in terms of targets, levels, I mean the low of the day obviously is a kind of level that we'd like to see hold, given the fact that even though we had that sell-off, the fact still remains the earnings reports that have come in have been really good on the whole. So, we shouldn't really be trading this far lower off the back of Bove talking down Wells Fargo. Yes, the oil situation is a much more serious problem and a longer-term problem than Bove's comments on Wells Fargo. So we've got to keep our eye on the oil price when it's above 80. It could well have a negative correlation for stocks going forwards, okay? So downside target, obviously the low of the day. Upside, I've got my fib levels here, and the 23.6% has really formed pretty much the high of the day, where we've got a double top up at around 1078 area. And then let's see if we can get some good earnings and some good data. Let's see if we can retrace some of this big drop that we had into the close yesterday. Let's quickly go back to the long-term chart, because some of the downside levels we're looking at would be at 1063, which was the low on the 13th of October, and then 1056.75, which is actually also S2, and it's a long-term pivot around that area. So they're the two sort of levels on the downside, 1063 and around sort of 1056 area. Okay, I'm going to leave it at that, guys, because we've got earnings coming in a couple of minutes. So have a good day.